머리 앞서 그래서 because sometimes it's like from
All right. All good? All right, perfect. So hello, my name is Matt. I'll be your timekeeper for the day. Before we continue, I just want to confirm you are Team B, is that correct?
Yes.
Perfect. So I'll show you the warning sign when there's 10 minutes, 5 minutes, 2 minutes, and 30 seconds. So the sign will look like this. If this comes up, there's 10 minutes left. At the 10-second mark, I'll count down my fingers, like 9, 8, 7, until we get the 1 second mark, which then your presentation is officially finished. After that, I will say stop, after which team must stop talking immediately. After the presentation, a 10-minute question and answer or Q&A period will begin. I would like to remind you that all teams must present for a minimum of 15 minutes, and all team members must speak during the presentation, but not necessarily in the Q&A. Audience members, we ask you to please put your phones on silent mode and remain seated in the room for the duration of the full presentation and Q&A period. I'll now let the judges introduce themselves. Once they are done, you may begin the presentation, and the timer will start on your first word. So judges, go ahead.
Hello, welcome everyone. My name is George Petronas. I'm a Canadian CPA. I've worked in various industries. I'm returning here this year for the 9th time, so I wish you good luck.
Hi everyone, I'm Hassan, a finance graduate, first year judging, working in food industries from banking, insurance, telco, London.
Hi, my name is Sudha Ripple. It's almost a 10-year judging at JMUCC. I'm looking forward to hearing your guys today.
I'm Claudine Getty from talent acquisition at Group CH in sports and entertainment, and looking forward to seeing you guys' presentation today.
So when you say your first word, I'll begin the timer.
Nesto Cloud is on a mission to empower customers and build an ecosystem where customers feel protected, empowered, and safe. Essentially, you're building a nest. You want to collect customers, grow that nest in terms of population, and ensure that your customers are so happy and so well taken care of that they don't even want to leave, so you can continue growing the nest at scale. And that's exactly what we are here to do. Good afternoon, judges. We are Chris Associates. My name is Darren, and with me are my colleagues Vicky, Rachel, and Zach. We are very excited to be here to present to you our solutions for Nesto. So we start our presentation with a very simple objective: how to increase adoption of Nesto Cloud by acquiring and retaining more clients. We will achieve this through our strategies. Firstly, we revamp the sales model and find a better way for you to approach and acquire these new clients. Secondly, by growing clients, making it easy for them to onboard and increasing and reducing the barriers to adoption. And lastly, we retain them, because what is the use of acquiring customers if we don't retain them for the long time, increasing the lifetime value as they continue to grow alongside you. And this will result in significant impacts. In fact, we project that you will have more than 11 million in incremental EBITDA by 2030. You will enjoy more than 9% margin improvement and a 1.2 times improvement in monthly recurring revenue per user. So let's move on to the analysis. So we look at our current state, where there's a high friction and customer resistance to adopting your products. Where we intend to end up is at your dream destination. Increase customer adoption and customer stickiness with that loyalty. We will do so by answering 3 key questions. Firstly, how can Nesto revamp its sales model to acquire these new clients? Secondly, how can we break down the practical and psychological barriers to entry to make it easier for them to adopt your product? And lastly, how can Nesto increase after-sales servicing to make sure that even if other competitors try and steal your customers, they are loyal and they are not incentivized to switch? Let's find out what the analysis is. So, Nesto Cloud has built several core competencies which we think define its product. Firstly, the centralized data management allows for ease of use and increased time throughout the mortgage process and decreased time across the process. Secondly, the seamless API integration makes it super convenient for the various stakeholders to interact seamlessly across the chain. Lastly, the built-in AI capabilities are ever improving, and these are helping increase efficiencies on a daily basis, be it business as usual or large tasks which various stakeholders have to achieve. And this has resulted in exceptional growth and milestones. You have more than 500,000 customers. You managed to raise $80 million in Series C funding recently. And lastly, you have processed $7 billion in mortgage volume. Now, these are significant milestones which we should be proud of, but this is just the start because we want to dream big for your company. we see that the mortgage market is extremely exciting. It is the cornerstone of the Canadian financial ecosystem, and it's set to grow at a 4.8% CAGR. Currently, it's already a massive opportunity at $2.3 trillion in 2025. So we know that this is definitely an attractive space, and everyone wants a piece of the pie, which is why it's even more important to differentiate the way you capture that pie. So we see several key trends shaping the industry. Firstly, regulatory concerns, because these are ever-changing. So you can't just adapt to the regulations of today. You have to create a strategy to ensure that you stay up to date and predict what happens next and change your products over time. Secondly, digital transformation. It's a priority for all stakeholders in the ecosystem. And lastly, increasing competition. So, as mentioned, the takeaway is that we must remain proactive for regulatory concerns. For digital transformation, we believe you are very well poised to capture this trend in the industry, because as a digital native startup, you appeal more to this desire to go digital and to offboard to software solutions. Lastly, with the increased competition from many competitors who are incumbent and new entrants as well, we must aggressively acquire and retain to get a head start against them. So the loan origination life cycle is very complex. There's many different steps, and each step has a lot of data requirements and various stakeholders, as well as different regulations which you must skirt around. That's exactly what Nesto Cloud does. So it helps to break down these expensive, complex, and time-consuming processes through providing an end-to-end SaaS solution and an API integration, which allows for the different stakeholders to interact with each other, communicate better, and to automate all these data-driven processes. So when we look at who your customers are, we decide to segment them into 4 categories. First, we have your traditional banks, credit unions, alternative lenders, and fintech. Now this is important because for any strategy, we need to be targeted and we need to know exactly which profile we are targeting. We believe that your bread and butter is currently traditional banks. They have the largest piece of the pie. There's a strong growth potential because they have the majority of the market, and there's a high strategic alignment. So they are where we think we should focus on first. But what I would highlight is that as an extension strategy, in the future, emerging fintech is also very exciting. It may be a small piece of the pie now, but the intention to buy to build is very important here. What that means is that they are more likely to outsource their software solutions to players like you in the long term. And because they are growing much faster than the market at around 8 to 9%, we believe that in time, they will take over. So our strategies will focus first on banks, but we believe later on down the road, there's definitely room to grow within emerging fintech. So what I want to highlight next is our current sales channel. So we believe that even though we are currently targeting banks, we're not doing so in the right way. Our sales staff are approaching the head of mortgage or the head of products, when we should actually be targeting the sales channels. So let me demonstrate to you how our current sales strategies are going and why they're not working. Introducing Rachel and Vicky. So Rachel is head of mortgage at Scotiabank, and Vicky is a sales representative at Nesto. Vicky tries to throw our products at her, and we'll see how it goes.
Hi Rachel, I'm Vicky. I'm a sales representative here at Nesto Cloud. Seeing if you're interested in buying our products, we offer end-to-end mortgage lending.
Yeah, I heard about you guys, but I'm not sure if the team really wants it. I'm gonna think about it in the long run. We'll get back to you very soon.
So as you can see, Rachel has no incentive to onboard these products. She's not a sales rep, she's not versed with tech, and she has much bigger concerns rather than making BAU processes more efficient and faster. So she brushes Vicky off. As you can see, there's that misalignment, which lends us to our first key question. How can Nesto Cloud revamp the sales strategies to capture these new clients? And I believe we have the solution for that.
Sorry, technical.
The clicker's not working.
It's not working?
Oh, you have to
Okay.
point it.
Oh,
You need to
there you go.
Okay, sure. Okay, thanks Darren. With that, let's take a look at our recommendations, and I'm very excited to present to you our solutions to nest more financial partners through a revamped B2B sales strategy that gets, grows, and nests more financial partners for you. So now let's take a look at the current sales model that you're working under. In order to get more customers, today's sales model at Nesto Cloud, we first outreach to the mortgage head of customer. In this case, it's Rachel, who's the mortgage head at Scotiabank. And after she expresses her interest in buying Nesto Cloud's product, the organization will now undergo a multi-stakeholder evaluation through technical deep dives to different departments and stakeholders within the organization, including the risk and compliance, technology, and operations team. And with this, we achieve organizational alignment upon which the purchase will be made and the product will be adopted into the organization. However, we believe that this current top-down approach limits scalability as it requires the utmost quicker to express intent of purchase, to even gain exposure to the product from the stakeholder's perspective. And however, there's greater psychological barrier that must be overcome to successfully overcome decision makers without proven benefits. So this is why we would like to introduce you to our new revamped sales model, and that involves different stakeholders, such as the sales team member at Scotiabank, who is interested in adopting Nesto Cloud, and also the software procurement team member at Scotiabank, which will engage different stakeholders of the customer's organization to adopt greater interest and awareness for Nesto Cloud's product. So their organization is curious to know more about Nesto Cloud, but they also do believe that it is quite an investment, so they want to know more about the product and actually know that there are actual benefits that will be brought before making any financial commitments. And once they know more about the product and benefits, they're able to talk to the boss, like Rachel, to make the purchase. So with this brings us to tomorrow's sales model at Nesto Cloud. So let's take a look at the step-by-step. So it starts off with the outreach to the sales team and software procurement team of the customer's organization, which then will lead to time-limited free trials and workflow simulations offered to the actual customer stakeholders within the organization, ending off with internal discussions and decision-making by the head of mortgage upon where they undergo a discussion with the different stakeholders that we have mentioned before. So let's deep dive into the details of each step. So on the first step of outreach to sales and software procurement team, what we will do is that Nesto Cloud will be developing a sub-department within its sales team to specifically cater to each type of customer type, whether it be traditional banks, credit unions, or fintechs. And the software procurement team will work alongside this process to assess and evaluate the Nesto Cloud platform product to inform technical feasibility of this implementation. And what does this mean for you? The benefit is that you bring opportunities to connect and test out Nesto Cloud's products to more relevant stakeholders other than just the market hedge of the bank. And it also brings organizational coherence in decision making. Now moving on to the second stage to actually grow these customers is the time-limited free trials and workflow simulation, where based on the assessed purchase intent level of the initial conversation, we will be offering free trial to allow stakeholders and customer organizations to test out the full features of Nesto Cloud. And also alongside that, in the case they do not wish to implement the free trial into their systems, we will be offering free workflow simulations to demonstrate the BAU of stakeholders when using Nesto Cloud. And what does this mean for you? Again, the benefit is that you have increased awareness and interest for adoption based on real user experience, have reduced psychological fear and barrier to new technology adoption, and bring faster time to value to the actual stakeholders and users who will be using Nesto Cloud further down the road. So you may be wondering, what if the free trial implementation does not work out? Well, we have a case study to prove the success and the feasibility of this implementation through Xero. Xero is a leading cloud accounting software for small businesses that offers a 30-day free trial that allows users to connect bank accounts, test invoice generation, and explore reporting features, where users are able to experience a full month-end closing process before committing to a subscription, bringing greater time to value. Yeah, with this, the final stage will be to undergo the internal discussion and decision-making by the head of mortgage, where they will now have better knowledge of the tangible benefits of Nesto Cloud and be able to better convince Rachel to make this purchase to adopt Nesto Cloud into the organization, bringing greater organizational alignment, ensuring greater customer lifetime value and lock-in, as well as strengthening the reputation within the lending ecosystem through a more robust knowledge of the benefits of Nesto Cloud. Now with this, we know that all the different stakeholders within Scotiabank are aligned on the interest to purchase Nesto Cloud, and we are now ready to embark on a new journey. But is that all, Rachel? We have answered the first key question, and Rachel will bring us through the next steps.
Thank you, Vicky. So currently, decision makers find it really costly and lack trust in the implementation process. So in today's implementation model, Vicky will actually promote that, you can implement through the internal system or the preferred integration partners. However, our client like Scotiabank will find that data implementation is so costly because they're so entrenched in their previous system, and they're wondering, can I really trust your system or trust other third-party providers? So this is our key question. How can Nesto Cloud actually break down the barriers to adoption to onboard new clients? So we present you with two strategies. So we like to introduce tomorrow's implementation model, firstly to the in-house implementation at cost price, where customers will actually pay at cost for the cloud implementation. So this will actually reduce the cost barriers to your company and also increase the ease of purchase for our products. Next, we like to promote a pre-built ETL, which is a ready-made data migration pipeline for high-frequency migration sources. So what does this mean for you? This will rapidly increase the scale of expansion because it increases the ease and speed of your adoption rate. Secondly, it also increases the trust for your clients because of this in-house implementation, and we aim to duplicate this data mapping into the old system during the integration process. So how does pre-built ETL look like? So we aim to empower your internal stakeholders to scale these adoption at a lower cost. So the client have an existing legal software at a data source at Excel. So the pre-built platform for Excel will extract, transform, and load the data into your end destination, which is Nestle's cloud software. So all of this aims to reduce cost barriers and also to scale that level of expansion because the pre-built mapping data where you can accelerate this transfer of data. So how can we then mitigate data migration fear? There's a really strong case study and done by McKinsey to show that a lot of consumers actually fear the potential missing data, data leakage, and data distortion when they're trying to port over from one system to another. So we actually proposed the parallel cutover, which is a new strategy for data migration. So the parallel cutover is a parallel running migration which moves from one data to the target environment, which is Nestle Cloud, while ensuring that the data system still remains relevant and current in their old software. So this will actually help increase the trust for the clients as they onboard into our process at ease. So with our ETL adoption, we will address our second key question. How can we break down the practical and physiological barriers to consumption?
Right. Thank you so much, Rachel. So let's take a step back. What we've achieved so far is we've onboarded your clients and given them the tools to integrate your software. But what we notice is that there's many competitors within this market. These are just existing competitors, and many new ones are popping up every day, trying to capture a slice of this juicy and growing pie. So what we realized was that the third key question is, how can we then increase after-sales servicing to make sure that we retain the clients that we've now onboarded? And I believe we'll find out how to do that.
Thank you, Darren. So here's where we come in again. So we propose a dedicated customer success team to be involved in the after-sales process. So once Vicky onboards our client into the Nestle Cloud system, it will hand over to Rachel, which is the Nestle Cloud customer success team. So the Nestle Cloud success team will actually do three things. Firstly, structure onboarding checks. Secondly, define implementation processes. And thirdly, conduct regular dialogue sessions with our client Scotiabank. So how does the structured onboarding checks look like? So there's a weekly check-in in the first 2 to 3 months of the onboarding process with our stakeholders to address queries and provide education on the ground. Because currently most of the education is done at a higher level, but with this, we feel that to actually speak to the people that are using it on a day-to-day basis, that is really, really crucial and important to demonstrate that value that we are providing. Next, for a defined implementation process, we feel the stakeholder management among risk and compliance, etc., on regulatory alignment and security posture is really important to increase the stakeholder acceptance of our product. And lastly, the regular dialogue sessions is like a monthly feedback loop session to gain feedback and really understand the new pain points that they discover while they're using our product. And by doing so, we can continuously update our product offerings based on the feedback and based on the value that we see our clients are currently facing. And by doing so, we can provide added long-term value to our clients. So with that, we can ensure greater customer satisfaction, lower switching barriers, as well as increase lifetime value to your customers. So, Jiayang, how does our financials look like?
Going back. Point at the laptop, please.
Yes.
Judges, now that I've walked you through our get, grow, and NAS strategy, allow me to walk you through how the numbers flow through. Through get, grow, NAS, Nestles can scale adoption without breaking profitability, achieving 11.2 million in incremental EBITDA by 2030, as well as a 1.2x improvement in monthly recurring revenue per user. By 2034, our recommendation would drive 41.2 million in projected revenue, as well as a 1.7 increase in customer lifetime value. Most of this is driven through our growth-led strategy, which is expected to champion 9.5 million in incremental revenue by 2030. To achieve this, Nesto will have to invest approximately 7.4 million in initial capital for team development, working capital, as well as infrastructure, with the majority of the cost bucket being payroll as well as staff development. Of course, we have mapped out a clear implementation timeline with 3 must-win battles. Firstly, we must be able to achieve a successful pilot. Secondly, we must be able to reduce the switching costs and risk for our clients. And lastly, we must be able to standardize to scale our solutions. Of course, no plans comes without risk. For Nesto, we have identified 3 key risks with clear operational mitigants. Firstly, ETL migration trial might fail. However, we are able to mitigate this with Pilot Gate with clear KPIs. Secondly, client adoption may remain a risk, but we solve for this with targeted prompts and clear value summary. And lastly, data security is paramount for Nesto, so we are able to mitigate this through controls as well as checks built in. Judges, you have asked us how we can increase adoption for Nesto Cloud by acquiring and retaining more customers, and we present to you Get, Grow, and Nest. We hope that our solutions can bring Nesto Cloud to new heights for it to become the #1 commercial end-to-end lending solutions for Canadian lenders. Thank you very much.
Perfect. Thank you, Delegate. We'll give a round of applause. So that is the end of the presentation. We will now begin the question and answer period. Just a reminder, the question and answer period will be 10 minutes. So I'll start a timer whenever the judges ask the first question.
On your implementation, you had one of the options that was presented is cost price. Once you do the cost price, how do we generate continuous revenue? What is the model afterwards?
Right, so maybe I'll take that question first, then my colleague can chime in. So currently what we have is 2 revenue streams. Firstly, we're charging implementation fee and migration fee, following which we have a monthly recurring subscription. What we are suggesting here is we provide the implementation at cost. What that means, that means that it's easier to get the client. Once we onboard them, we believe that the SaaS revenue will take over time, and that is really the metric that we should be looking at as a SaaS company. We shouldn't be looking at one-time revenue.
Thank you.
So when you looked at your solution, did you consider the Canadian real estate market when you look at determining your revenues, right? You take a piece of the pie, if you will. So did you look at the market and see where the market is going, and if that market is growing overall? Because that'll it'll be a share of the pie, and the pie is getting bigger. So is that something you assessed at all?
Yeah, so we definitely assessed that, because what we found was that there's really 2 options when you think of growth, right? Is our current market big enough to sustain growth in the long term, and growth that we can be happy with? And what we decided was, the answer is yes. There's no current need to expand globally. We think that the Canadian market is deep enough, and currently we are only sitting at about 3.5 million in recurring revenue. So there's a lot of runway to go within Canada's market. In terms of trends, what we found was that the big banks are still the leaders, and that is where we look to onboard them. And there's an added benefit because they come from branding, right? Within Canada's market, we think a lot of the players within the real estate, they look up to what the big banks are doing, and they look for them to direct change. If we can onboard successful big bank customers, that's a positive signal to the rest of our customers, which can onboard over time.
Just to follow up quickly, why did you choose fintech as your second demographic to go after?
Right, because what we saw in fintech was that there's a huge alignment with our company as a SaaS startup. So these fintech platforms, they have a big desire to buy rather than build. So with your established legacy players, a lot of them have been building in-house software solutions over time. For some of them to adopt your solution, it means they're going to scrap what their long-term in-house projects were. These new fintechs are more nimble, and they don't have the in-house capabilities to do this. For them, this is background which they rather outsource to you. And we think there's a high alignment there. On top of that, they're the highest growing segment within the Canadian market.
The previous ETL that you had suggested, like, what's your recommendation for Nesto about how to go about building that?
So essentially, we currently have an in-house team at Nesto, which is called their internal implementation experts. So we did some digging. A lot of these experts actually do have a lot of technological knowledge in the system, and there are actually some experts that are known to do ETLs. So we actually recommend to maybe hire or engage one person to actually have the deep knowledge in building ETLs, maybe from Accenture or other software integrators, and they actually can teach and also educate our current existing experts. So there's not much of the workforce restructuring. They're actually just giving them a new job skill. Yeah.
And why this is so important for our solution is that currently what we found was that sure, having an in-house specialist team is great, but it's not scalable because it requires a lot of manpower every time you want to onboard a new client. We're creating a tool for your existing team to do more work in less time. On top of that, this feeds into our first recommendation of providing implementation at cost. With this pre-built ETL, you'll provide cheaper implementation and faster. So you see our two recommendations work in sync.
Yeah.
When you're talking about implementation at cost, how do you expect to control that with the client, right? How do you set those expectations?
Right. So I think as a baseline, we did not give a label exactly how much it will cost yet because we recognize that it's a case-by-case basis and we want to customize that. So when our sales team approaches the client and once they decide to onboard with us, we will have that conversation and we will tell them, look, this is how much it will cost if you went to our competitor, this is how much it's going to cost us to do it, and we will be very transparent about the cost and show them that we are providing it without any profit margins, which we believe would get them on board and excited about it.
So in terms of approaching the sales, we're going to go, instead of going to the top guard, we're going to go to the salespeople who actually understand the ground. So with that, there is the question that comes up, build versus buy, which is usually not a problem that a sales rep will think about. How would you address that situation when you go to a sales pitch?
I think when it comes to like the sales approach, the sales team is definitely a pillar of it, but our suggestion is not simply to just approach the sales team, but there are different stakeholders involved, including the software procurement team, which we believe is there to ensure that there's technical feasibility and to make sure that the integration is actually worth it, like the investment is worth it to make. But other than these stakeholders, we believe that the internal discussion is also going to involve those that are to do with like financial investments. Also the finance team will be part of it to make sure that this investment is justified and to make sure that it's something that brings value to the organization. So we believe that if all these different teams work in tandem, the sales approach, even though the sales team will be the most representative member of the initial approach, we believe the decision itself will all come in sync with a coherent understanding in the organization.
So, question on my end, and in terms of the sales team, a little to that the previous question, why would they be incentivized to take the call? Because typically it sounds like a cold call. You're not going through the department head, but you're reaching out to the people who might be most interested, but might not be necessarily motivated to take the call. So why would I, as a salesperson, want to take your call and say, come and talk to me about it, if you're bypassing my superior, if you will?
I would say for the sales member, the most intuitive incentive that they would gain from this is like a KPI. So I think organizationally, if this sales approach actually becomes a legitimate system or an initiative that they would like to undertake within the organization, then a KPI can be set for the sales team members to make sure that like when every cold call they give, and then they're able to manage into further discussions down the road in order to adopt Nesto Cloud can be like part of their KPI, and this will actually be an incentive for them to actually work for this, and it will also enable them to build relationships stronger with the executive members, as they will also be involved in further discussions to give them feedback on what the different stakeholders and relevant customers within the organization has said about the Nesto Cloud during the free trial.
Maybe leaning on this question, we go through the sales channel, everything's going on. How do you make that decision between the trial simulation and how do you control to bring that to the right group, right? When's that right timing?
Just to clarify, your question is how we make the decision to give out the simulation versus the trial, is it?
Correct.
Yeah, so I think first of all, we would like to prioritize the free trial because obviously a free trial is a more tangible and it's like a more holistic way to actually experience the full suite and the values that Nesto Cloud can bring. But we understood that like the free trials, the adoption may have some barriers considering how it actually requires like system implementation and integration into their systems. So in the case that they show resistance to this, then that's where we will move to the secondary offering of giving them workflow simulations, which even though it may not give them like tangible and direct experience using the Nesto Cloud product itself, but it will still give them a very holistic view of the actual simulation of their BAU that will look like when they use Nesto Cloud, and we believe that this will give them an idea of their purchase intent. Yeah.
In terms of B2B or retention of clients and post implementation, how long do you think once we attract the client, our agreement with the vendor, how long do you think we're going to be signing and how are you going to keep them always coming back to us without switching over?
Right, so I think in terms of SaaS companies, we generally do charge a monthly revenue, but what we saw is that these relationships tend to last at least 1 year, because when the banks do, all these customers get approval for this, it's usually on a yearly basis. How we will make sure that they continue coming back to us is through our regular touch points in our recommendation. What we also intend to do is to adapt alongside our customers. So we want to have regular touch points where we ask them, what feature would you like next? What can we change? What can we improve? And we want to make sure that we're staying ahead of the competition so that these customers will never look for another customer. And on top of that, they've added switching costs as well, because if one of our competitors tries to adopt the customer, they don't have a built-in ETL system and they don't have a way to migrate this customer over to their system yet. So that's why our head start is really important, and to constantly change. Once the customer's with us, they're incentivized to stay with us. So we're going to continue developing the product over time.
All right, perfect. So that ends the question and answer period. Thank you, delegates and judges. Give a round of applause. Perfect. So everyone can leave the room, so audience and delegates, and we will shortly begin the deliberation within the judges. Thank you, everyone.
Thank you.
Thank you so much.
Thank you.
Thank you so much.
fully agree.
Oh, where did Team F go? No, we took care of them. Exactly.
Sorry? We record my team. Did I record? I record. We do recording.
Oh, I don't think you have to because here's recording, so you
Yeah.
go online and watch.
But I asked them, am I on myself? I said, okay.
Okay, give me 1 second. Let me
Yeah,
look.
can
Yeah, for sure. Give me 1 second. So, you guys ready? Good? Alrighty. So, hello everyone, my name is Matt. I'll be your timekeeper for the day. Before we continue, I'll just like to confirm that this is Team C. Is that correct? Amazing. So, I will show you a warning sign where there's 10 minutes, 5 minutes, and 2 minutes and 30 seconds. So, for example, this will be a time signal at 10 minutes. So, if this comes up, there's 10 minutes left. Okay? At the 10-second count, I'll pull my 10 fingers up and I'll count 9, 8, 7 until we hit that 1 second mark. At the 10 seconds, when I will say stop, after which the team must stop talking immediately. Afterwards, a 10-minute question and answer or a Q&A period will follow. I would like to remind you that all team members must present for a minimum of 15 minutes, and all team members must speak during the presentation, but not necessarily in the Q&A. Audience members, we ask you to please put your phones on silent mode and remain seated in the room for the duration of the entire presentation and Q&A period. I will now let the judges introduce themselves. Once they are done, you may begin your presentation, and the timer will start on your first word. So judges, go ahead.
Welcome everyone. My name is George Colacacharas. I'm a Canadian CPA, returning here to JMUCC for the 9th year in a row. I'm really excited to listen to you. Good luck.
Hi everyone, I'm Hassan, recorded graduate, first time case competition judge, and I'm looking forward to the presentation. Good luck.
My name is Sudoripo. I've been also doing judging for a long time now at JMUCC. Good luck on the presentation.
I'm Karin Gani. I'm a senior manager at talent acquisition for Group CH, so it's in sports and entertainment, and I'm looking forward to the presentation.
So you may begin whenever you're ready.
In the year of 2022, Nesto emerged as the leading cloud.
Try the other way. There we go.
Right, sorry. Nesto emerged as the leading cloud-native end-to-end mortgage technology platform for financial institutions. However, now, 4 years down the line, in 2026, this isn't new anymore. We're with competitors in the increasingly competitive landscape. They're now increasing adoption of AI as well as the end-to-end mortgage services in the landscape. So therefore, there is this need for Nesto to find its edge again. And here are the objectives that we want to achieve after this presentation, which is to develop our B2B sales strategy, further innovate our post-sales service plan, and also determine an internal structure that will support all of this growth. Good afternoon, judges. We're DAS Consulting, and today I'm with Daniela, Angel, and Aubrey, and here we present to you our SSS strategy. With this strategy, we hope to leverage your core competencies as well as to develop your functional teams to achieve the effect of scale up, set up, and finally step up your game. And with this, we will hope to achieve the KPIs of reaching 12% CAGR, becoming the #1 bank's API partner in Canada, and also achieving a 40.2 million Canadian dollars in revenue. So, coming to our situation analysis, we first have conducted a competitor analysis where we focused on our competitors nCino, IC, Encompass, and Q2 Cloud Lending. So with the first criteria, we looked at the market focus, with Nesto being the only Canadian cloud native in comparison to the other three. And therefore, this has given us a competitive advantage of the in-country regulation, that's our expertise, as well as the deep integration within the current ecosystem. And this has also stemmed from our current ecosystem with our mother company, as well as our origin from Nesto itself. Our second criteria, which is revenue model, is a bit of a less competitive advantage. So because of our native nature, we have a more competitive rate compared to others. However, what's another really important competitive advantage is actually also our BPO service model. So as compared to the other competitors, we provide BPO model, whereas everyone else is currently only providing a SaaS model. So what does BPO mean? BPO means that we are going to service a part of our processing teams to allow a greater opportunity for price deduction and cost deduction. And so this will allow our partners, our business partners, to further reduce their cost in labor and in certain business processes. And finally, the key takeaway is that we should leverage the three competitive advantages that we've identified just now to further engage in our sales strategy. So now we can look at our target segments, which will be big six banks, credit unions, fintechs, and alternative lenders. So we have first identify these two criteria in terms of profitability. So which of these partners will give us the greatest opportunities? And here we can clearly identify that Big Six banks has the greatest market share, 65%, and also the greatest purchasing power. And the rest are pretty explanatory. So, and for the other two criteria, we're going to talk about their alignment with our current offering. So, because of our core competencies in reducing costs, as well as using our regulatory our expertise to fix those problems for them. So therefore, we have used these two criteria and see if they align with our targets. And because Big Six banks have the greatest complexities in their current company structure, as well as they face the greatest regulatory scrutiny, so these two are marked red for them, and therefore they're the most aligned with what we are currently offering in our services. So therefore, we've identified our Big Six banks as the greatest opportunity for our target customers, and credit unions as the second choice. However, we're going to focus on Big Six banks more. And now, if we talk about buy or build, we can actually see that this is the same trend that we've identified before. Because of Big Six banks' current cost burden, as well as their need for regulatory expertise, it's actually more costly for them to build a system themselves. And so therefore, in terms of the choice of buy or build, it's actually much more attractive for Big Six banks to actually buy a service instead of building it themselves. And so therefore, we have reached our final conclusion of our target customer, which is the Big Six banks. So now, going back to our key objectives, the first one is enhancing our B2B sales. We're going to do this by emphasizing our two key competitive advantages. And then we're going to enhance our post-sale servicing plan by actually implementing more functional teams, which we'll explain later. And finally, also emphasizing our functional teams as well. So now I'll pass it on to Daniela for our strategy.
Thank you, Sam. So now what we're really looking at here is being able to look into how we are able to scale this up internally and externally. So externally, we're focusing on scaling up, on reaching more target audiences, which we see here to be, sorry about that. No worries, we will get there in a second. There we go. Yes, here we go. So the first thing first is to be able to scale up externally to capture this group of audience before setting up internally in response to this strategy. And what we're looking here is a B2B sales strategy that would be able to capture this group of customers in terms of Big Six banks through exactly an amazing opportunity, which is the API Open Bank integration that is currently happening in Canada. So we're seeing that banks are currently asked to integrate into the Open Bank regulation by mid-2027, which includes both reading and writing access. We're also seeing that there's growing competition when it comes to the mortgage market, where more mortgages are being renewed and with shorter term renewals, which lead to more business opportunity. Now, these two combined actually give a very big pressure to these banks to be able, one, adhere to those regulation requirements before 2027, as well as two, be able to be competitive enough to capture this much of audience. And so now we see that banks need to integrate this API. But the thing is with API integration is that, one, costly, as we previously mentioned. Two, it requires specific expertise to be able to implement these strategies through the technology API. It is not just a random job that an IT person currently at a bank can handle. And third, compliance-heavy issues. Once you integrate data onto API websites and API platforms across different banks, it means that there are more compliance issues that are very data sensitive that we have to adhere to, that are way beyond the current scope that banks are looking into in terms of regulatory compliance. And so given that these three reasons, we believe that Big Six banks would have the drive to source out their API integration as of the current moment if they had not built in their own technology arm. So we see that TD Bank would be a very, very great example compared to RBC. RBC currently has its own internal tech arm that basically utilizes machine learning for financial purposes. And they'd be able to easily develop this API integration. TD Bank, on the other hand, only has very simple AI agent-related functions, and so does not have the capacity at the moment to reach this goal by 2027. And TD Bank is exactly the type of bank that we want to target. The type of bank that does not have the capacity to meet the API integration urgently needs to outsource this. Now, as a result of that, what we'd be able to do is provide a trial package to them as a response to this. What's going to happen is that we will set up a scale-up trial program where we can scale up your service in parallel. What we offer to our customers and what they're exactly paying for is an implementation fee for API integration and the adherence to this 2027 data legislation. But what they're actually getting is a complimentary free trial for our Nesto program. So that would mean that they pay us a price, we help them integrate their API. And on the side, we'd be able to offer them a free trial to the Nesto system. Now, how is this trial going to be implemented and how is this going to work in terms of the trial? So we're going to see that in the back end, the legacy system will actually operate as usual in connection to the app, to the website, to the internal payment systems at the bank itself. However, what we will be implementing is what is called a mirror system, where Nesto Cloud is implemented only on the back end of things, so that it mirrors the operations that the legal system is currently operating under, but allows the back-end staff to experience the operations and decision-making process through the Nesto Cloud system without affecting the end outcome, which is exactly the customer experience through the banking system, through the websites, through the app. Now, this poses two big benefits for us. Firstly, on the left here, you can see that banks are able to retrieve data very clearly to compare that of legacy systems to the Nesto system. That includes efficiency, compliancy, accuracy, etc. Now, moreover, what we see that is on the front end, the legacy system actually does not have any positive reinforcement cycle to help you understand what customers are like. How are we supposed to actually capture this group of target audience once they want to renew their mortgage? And that is the key that what we can provide in difference to the legacy system. We are able to capture that data, be able to feed that data into our data models, and be able to provide information to our clients, telling them exactly based on the income, based on the API data that we're being able to retrieve, exactly what prices, what interest rates would the client be accepting once they want to renew their mortgage, what type of cross-bundling opportunities I'd be able to offer based on their click rates, based on what they've been browsing, based on what is available on the API integration on the open bank system. Now, this data is a positive reinforcement cycle where we see more data feeding in, capturing, making it more effective for us to capture customers. Customers come back, we have more data, and the cycle keeps going and going and going, which makes it super beneficial for the bank and us. Now, the key question here is, why did we choose these specific points? We see that, first of all, using API integration as a hook to get these customers helps us feed into the immediate pain points of these banks. They have an urgency to work with us, not because we own a system, simply for meeting that regulation requirement. And it showcases our professionalism in terms of compliance and data security. By integrating our data, by integrating into the API, we're showing that that you'd be able to trust us with our data, and that we are capable, technology-wise, to be able to transfer all of your system data into a new system. And by that, we are able to gain partner trust with a small fraction of the cost, with a small fraction of the efforts. Now, in terms of the mirror system, we are able to adhere to both the management level and the implementation working level. For the management level, there's a direct performance comparison, which also encourages the client to adopt our system given the immediate effects, which reduces the friction when it comes to changing partners and further encouraging them to be able to adopt our system. Now, in terms of the implementation level, what's happening on a mirror level is that we're also being able to gauge how much the employee's technological capacity is. We understand that cross-department, across different client groups, different employees have different technological capabilities and different receptancies towards AI agents as well as technology in general. And so being able to deploy this through the mirror system helps us gauge the different technological levels across different groups, adopting that test and learn mechanism that is being deployed by multiple consultancy agencies out there like Oliver Wyman, and then being able to ensure that the use of the platform post-implementation would be much smoother, meaning that we are able to adapt the technology and the platform across different departments, being able to tweak it slightly so that it matches the technology requirements, the adaptability, as well as the employability in terms of different employees and their functions. So by the end of this, what happens when we actually deploy the system? How can we ensure that staff members, despite our efforts to engage in their proficiency levels, are able to adopt our systems? So we engage this in two different ways. Firstly, in the change management workshop, where we provide both a user manual as well as clear descriptions, clear annotations of screenshots for them to be able to gauge the situation and deploy the system perfectly. Now, in terms of successful case sharing, we understand that as a person that works into technology, they might not understand what's actually happening in the financial scene. They might not understand what are the bits and pieces that comes into this job. And so having someone who's previously worked in the industry, worked in their place, to come in and share their experience with the app would be extremely helpful to get into the nitty-gritty little details that would help them deploy this system perfectly. And we propose to be able to engage our current partnerships with our mother companies. They have successfully adopted our program, as well as IEG Wealth Management, which is one of our current clients, to be able to engage in these products. And now with this, not only do we have a very accessible method for our employees to be able to adopt the system, but it could be also extremely interactive in the very long run. Now with this, what we're able to do is scale up our operations externally. But how are we able to set this up internally?
Thanks, Danilo. So we understand that with the innovations of our current B2B sales strategies, by introducing the API integration and mirror system, and also the overall workshop sessions for our clients, we need to get our people ready for these new innovations as well. And that's how we come to our setup process, where we will introduce our ideal internal structures and roles and responsibility for the implementation, especially for the new roles that will be expected to be coming out in the following sessions. So for our key takeaways for the ideal internal structures will be, firstly, is about the management team. So we will maintain the chief executive officers and also chief officers related to technology, compliance, and sales. Secondly, we will organize the teams in a specific project way. So that means every time when we have a project coming out, we will have a ready-to-go teams that consist of one compliance expert and one API integration expert, one to two experts for the overall operation and implementation of our mirror systems. And thirdly is the sales experts that will accompany our clients from the day one of onboarding to the ongoing process. And then secondly is the imagination of key roles and responsibility for the overall strategy implementation. We see that we will have the overall API integration expert that will have the duties of making sure the connectivity of the API to our current customers and new customers, clients, existing systems smoothly. And secondly is the mirror system expert that they will be responsible for the overall mirroring mechanisms for the current legacy systems and our new systems integration, so that all the functions and all the staffs within the client companies will be able to onboarding smoothly. And thirdly is the change management for client functions. So these will incorporating mainly the sales people that they will bring in the success stories from our other clients within the financial institutions, and also immediately address any questions that will be raised by our clients during the monthly workshop sessions. And next, I will pass the time to Aubrey to elaborate more about our impact regarding our strategy.
Thank you. So let's first look at the risk and mitigations. I think the main risk for our strategy is that the data privacy. Because bank, their data is at many of their customer data at confidential level, and they may worry that how we will use their data. We will promise to the bank regarding the use of the data, and also we will use a local database to run their data instead of uploading them to the drive to processing their data. And regarding the implementation timeline, we have divided to three major sections. The first one is the technology integration. So we identify the importance of the regulation, and we use half a year to do the regulation research to ensure this complies with the regulatory requirements. And the second part, we will first to start with some API to collaborate with the current bank, with the TB bank. And once they can use the API, we will then do the integration with their current system. And the second step is how to market to our customer, the target customer, which is the TD bank.
we know that for big organization, the key point is to find the right person to talk about our strategy. So our first step is to investigate who to talk to inside the bank to promote our strategy. After that, we will do the partnership and discussion to discuss what's the timeline for both to onboard our API. And last but not least, we'll do the post-sale maintenance, meaning the upgrade regarding the current services we provided to the bank. And this is an ongoing process that will start from 2027 second half year to all the way to 2030. So the last step is the internal restructuring. We understand that we need to restructure internally to assign the role for different leaders. So we want to do a top-down analysis. We will identify the key roles inside the bank firstly, say like the director for different departments, and then we will do the restructuring based on the leader, and the leader can do the top-down approach regarding the restructuring inside their team. So a strategy without financial impact is just a theory. So let's dive down to the financials. So on the left-hand side, it shows the cost breakdown and the revenue breakdown in 2030. And on the right-hand side, it shows the profitability projection. And the units for this is million Canadian dollars. So we can see that by 2030, we are going to achieve 40.2 million Canadian dollar with 12% CAGR compared with their previous 9% CAGR. So this
All right, so that is the end of the presentation. Let's give a round of applause to the delegates. So thank you for the presentation. Now we will open the floor to a question and answer period. Friendly reminder, the Q&A will be 10 minutes long, and I'll open the timer once the judge asks the first question.
All right, thank you everyone. I do have one question with regards to the strategy. You chose the big six banks to be your key target market, and then you further went ahead and said that the TD Bank seems to be the one you want to focus on. When you made that decision, did you look at what the proportion of TD was with regards to the other six banks, and did you assess what you're potentially leaving behind or alienating when you're actually putting more focus on TD?
Thank you for your question. We understand that TD's proportion could be very small when compared to, say, counterparts like RBC. But we believe that to be able to capture such a big market, especially with limited players, it's very important that, one, you have that reputation within the industry, which we are currently lacking. And so having that business case, having something to prove that we are a trustable partner in such a prestigious industry with these prestigious companies is very essential. So our evaluation of these companies as an entry point isn't solely on the profits or the revenue market share that we'd be able to capture by targeting these customers. The key here is being able to balance both the profits that we're trying to make from this deal, but also the long-term impact. So given these criteria, we believe that TD Bank would have a relatively easier approach in terms of capturing them, just because that their technology arm is yet to be that developed as compared to RBC. And so we think that that technological pain point is really where we start from, where we are able to capture them through that 2027 deadline.
Maybe picking up on your 2027 deadline, so you called it out as maybe your approach to creating the urgency in the market.
Yes.
How do you compare it to other parts of the bank that aren't mortgages? Why would they see it as urgency just for mortgages?
Can I get a clarification on that? Do you mean by why they would specifically implement this for mortgages and not for other portions of the bank?
Yeah, why would they implement this separately and choose Nesto to comply with the APIs, for example? But what about banking APIs for traditional deposit accounts?
Yes, understandable. So from our understanding, that API requirement is cross-bank, so it's implemented throughout every single banking department, if I understand that correctly. And so under that assumption, we would be able to provide service not only for mortgage, but also through other bank functions. And so the main goal here is to be able to capture them and then bring them into that mortgage system payment, the mortgage system essentially, and then using that API as just kind of a hub to get them on the grounds.
Okay.
To supplement on this is also based on the feature that for mortgages they need to do the negotiation every 6 months. So we think there are a lot of costs incurred inside so with API, there's more cost efficiency we can achieve under this segment because under every 6-month negotiation, we are able to suggest the pricing for the bank to propose to their customers, so they can have higher negotiation room inside the negotiation.
In terms of your go-to strategy is we're going to get them with the API and then go to the platform. Is that it? So in the interim, is a free trial? How do you want to approach that?
Yeah. So the API itself, we charge them at a per cost basis. So whatever cost it costs us to be able to implement that API, we get them on board. We don't really have financial data on how much that cost will be based on it, but we would be able to supplement that from my colleague in a bit. While in terms of like the complementary bit we call is the fact that we don't charge them a premium for being able to experience that free trial.
I have a question on your org structure. So in terms of the org structure, we're going to keep the management team as is, and then we have a project-specific team. So the current internal structure of the company stays as is, and then in terms of your API integrators, the mirrors, and the change agents, where would they fall in this org?
Thank you for this question. So we want to maintain the current overall management teams. That is the overall executive levels for the companies, and the members that we just mentioned about, for example, API integration experts and mirror system experts, and the overall change management like consultant will be lies on the project specific teams, because we think that this kind of teams is ready to go for the projects, and we can leverage the synergies for the previous projects that these teams helped with to next projects, as they are mostly serving for financial institutions, and we have the average setting for these kind of ready to go project specific teams. So we can also promote the collaboration between the teams as they will have ongoing collaboration between different projects.
Thank you.
I was just having a question a little bit around the sales strategy. So it's an interesting avenue that you took, say the API integration and the sense of urgency around the timeline. But I'm curious why you went with a strategy that would sort of like frame one client versus a strategy that would sort of hit all 6 main target customers. Can you maybe elaborate a little bit on why that was a choice?
Sure, of course. So it isn't necessary that we are targeting one specific bank. The way that we're going to put it out as is that you can target all 6 banks. That's completely fine. You can market to all 6 banks, reach out to all 6 banks. These banks have the same amount of urgency. But we believe that it is much easier to access banks, for example, TD Bank, that has lower technological availabilities at the current moment to be able to capture that 2027 deadline.
Just to quick add on to that, so our main purpose for this is we want to establish trial partners, that is the TD banks, so that we can establish our reputation overall in the financial institutions, and especially for those institutions that lack of the strong tech capability to do API integration. So we can use this as a very successful case studies that to back up our next move within the financial institutions. And also as we introduce the project specific teams, so we can also invite those project teams and the stories behind the implementation of our previous success use cases to introduce it to our current or the future potential clients in the institution.
Can I clarify the BPO offering? So are you presenting this more as a SaaS or a BPO service just to meet the regulations?
So thank you for this question. So we are going to present this as more of a BPO service offering because it's one of our core competitive advantage in comparison to our current competitors, because most of them are focused solely on SaaS modeling. We believe that this BPO model would give us the greater opportunity to actually reduce greater costs and also reduce more this labor burden from our for our clients and our partners. So therefore, we're going to go through this BPO modeling, and because of this, we should achieve a greater grasp on our target customers, which are the big six banks who have the need and urgencies for this cost reduction as well as regulatory compliance.
I've got a question on your customer segmentation. So you've decided to go with the big six banks, and in terms of your decisions, red box here, fintech and alternative lenders is really not in your scope. Fintech being the largest, or not the largest, but the sector that has the largest growth in terms of percentage, relative percentage. Why did you choose not to have that part of your plan?
Yes, thank you very much for this question. So when we have when we have built this customer segmentation, we're really looking at the short-term goal of what we can achieve today, and especially with these big six banks available and needing to reach this deadline by 2027, we're hoping to use this opportunity to actually get to a big portion of the market before we develop further strategies to actually capture other sort of customer segments. So therefore, you can look at this customer segmentation as a first 1 to 2 year plan of how we're going to leverage our current competencies to grasp the customers that are nearest to us. And with this established, we have the opportunity to further target credit unions as well as fintech alternatives. And also this is because and also over here we have also identified the cost burden and purchasing power. So this means that fintech and alternative, we also identified them as being potentially our customers. It's just not as attractive as big six banks as of right now. Thank you.
All right, perfect. So that puts an end to the Q&A period. Thank you, judges and delegates. Right now, I'll ask everyone to leave the room so we can start preparing for the next presentation. Thank you, everybody.
Thank you very much. Thank you very much.
Thank you. So hello, my name is Matt. I will be your timekeeper for the day. Before we continue, I'd just like to confirm that this is Team D. Is that correct?
It is.
Perfect. So I'll show you the warning signs when there's 10 minutes, 5 minutes, 2 minutes, and 30 seconds. The type signal will look like this. So when this comes up, there's 10 minutes remaining. And then in the last 10 seconds, I'll put my fingers up and I'll count down all the way to 1. So it'll be 9, 8, 7, all the way to the 1 second. And then I'll say stop, after which each team member must stop talking immediately. Afterwards, a 10-minute question or answer or Q&A period will follow. I'd like to remind you that all teams must present for a minimum of 15 minutes, and all team members must speak during the presentation, but not necessarily in the Q&A. Audience members, we ask you to please put your phones on silent mode and remain seated in the room for the duration of the full presentation and Q&A period. I'll now let the judges introduce themselves. Once they are done, you may begin your presentation, and the timer will start on your first word. So judges, go ahead.
Okay, welcome everyone. My name is George Patronas. I'm a Canadian CPA and I've been judging here for my 9th year. So I'm looking forward to listening to your presentation. Good luck.
Welcome everyone, my name is Adam Hassan, Concordia graduate, first year as a judge. I'm looking forward to your presentation.
Hi, my name is Cecilia People. I've been judging here for over 10 years. Looking forward to hearing you guys today.
I'm Vladimir Garden. I'm senior manager of talent acquisition for Group C, which is sports and entertainment, and this is my second internship and I'm looking forward to the presentation.
Whenever you're ready.
Good afternoon, Board of Nesto Cloud. We are Insight 4 Consulting, and we'll begin today by going over the agenda for today's presentation. Starting off today, I will outline the key problem and issues, followed by Tiernan, who will be outlining the analysis. Brianna will take us through the alternatives, followed by Russell, who will be outlining the implementation plan. Tiernan will walk through the financials, as well as the risks and mitigations. And I will conclude by highlighting what success looks like for your company. So starting off with why we are here today. To illustrate this, we have two of your potential customers. On one hand, we have Jamie, a regional credit union manager. They oversee driving growth and operations at their credit union. They're having efficiency difficulties and are worried about operational costs when it comes to implementing a new digitalized, modernized system to help them. They need a cost-effective and easy-to-implement tool in order to benefit moving forward. On the other hand, we have Alex. Alex is the chief mortgage officer at a large bank. They are worried about the rapid digitalization of the industry that they're currently in. They're debating whether they should build or buy and what is the best decision moving forward for them. They're running out of time as the industry is rapidly evolving and they need to make a decision. This directly ties in to your company's opportunity statement. How should Nesto Cloud revitalize their strategy to grow as an ecosystem growth platform? This leads into the 4 key issues that we've identified today. Starting off with the implementation friction. Next, developing a high standard of trust with financial institutions. Third, the required high level of platform usage needed in order for revenue generation, as well as the intensifying competition in a rapidly evolving industry. This leads to our core 4 objectives that we hope to uncover through our strategy today. Starting off with developing a scalable internal structure. Second, defining internal roles and responsibilities. Third, reaching $54 billion in service volume by 2030. And fourth, achieving strong institutional satisfaction with clients. And these objectives lead to our ultimate recommendation today, that Nesto Cloud should adopt a regional sales strategy to increase scalability and growth. The basis for how we reach this recommendation is analyzed through the analysis, which Tiernan will now go over.
Thank you, Emma. So just to walk you through our analysis, I will go through your internal capabilities, your external opportunities, a stakeholder, and financial analysis. So in terms of your internal capabilities, we see you have strong centralized data management, which enables automation. You have an ease of integration into institutionals, and lenders due to your API-first nature. And you have AI capabilities which allow for accelerated underwriting of the loans. So we think you should continue to leverage your core product offerings, and institutional interest will then follow. In terms of your internal challenges, you see a lack of internal sales structure to grow to scale, a lack of reputational trust with institutions, and a high level of platform usage needed to generate appropriate revenues. So you currently lack the brand equity and sales funnel to distribute your service effectively. In terms of external opportunities, we see that banks are seeking to increase lending efficiency through digital transformation. We see shorter-term renewals creating opportunities for digital lenders, and we see the uninsured straight-switch renewals no longer requiring requalification, which also benefits you. So while demand is evident, and fintech is currently the fastest-growing segment, your sales structure must first be fixed in order to allow for scale. In terms of our external threats, we see intensifying competition with many similar players among you, implementation friction due to this deep integration within institutions, and the build versus buy argument. And we see partners are naturally conscious of third-party platforms due to consumer data privacy issues. So these pressures are not cause for exit, but rather bumper rails that we believe should guide you forward. In terms of our stakeholder analysis, we see investors wanting a strong presence in the Canadian lending ecosystem. Executives need a sales structure that addresses all stages of the sales funnel. Borrowers want fast, simple digital solutions with total transparency. And lenders want lower long-term costs and a faster time to value to boost productivity. To achieve fast growth among this intensifying competitive system, a sales structure that leaves no borrowing gaps is needed. So this is the estimated service volume. Well, you would be roughly growing at a 13.8% cumulative annual growth rate based on your estimations. This is mortgage originations by province, with roughly the majority in Ontario and Quebec and British Columbia. So we see large players dominating with nCino, the ICE lending platform, and Q2 cloud lending. So although competition is intensifying, we believe that a rising tide lifts all boats, and your offering can capitalize on this digital transformation wave if structured appropriately. So we think you should focus on credit unions first to build this trust and amass consumer data to then leverage when you sell to the banks and larger institutions. And now I'll pass it on to Brianna to discuss the alternatives that stem from this analysis.
Thank you, Tiernan. So before arriving at our ultimate recommendation for your company, we first considered three key alternatives. First being to develop a direct B2C or business-to-consumer sales approach. Second being to continue with the current business-to-business or B2B sales approach. And then third, to adopt a regional sales model. So looking at the first alternative of looking at B2C sales approach, there are some key pros and cons here to highlight. Namely, the pros, higher volume potential is key, including increased flexibility. However, this alternative fails to increase the bank and credit union platform users. Intensity of competition is not addressed, and there will be a loss of control. Looking at continuing with the B2B sales approach, this will foster long-term client loyalty and increase revenue and profitability. However, this will not increase the, this will not address the high complexity, and it will also increase the buyer power that businesses have. And third, looking at adopting a regional sales model. So the key pros here include the targeted reach, tailored approach, localized customer relationship management, and increased efficiency and responsiveness within the regions themselves. However, the associated costs and a volume discount with this strategy is important to mention. So looking at our decision matrix, we aligned each alternative with the 4 objectives earlier in the presentation. So looking at alternative 1, the B2C sales approach, this addresses the strong institutional satisfaction, however does not achieve any of our other objectives. Looking at the B2B sales approach, this will also address the strong institutional satisfaction. However, it will also reach the sale service volume that we have outlined. And then looking at our third alternative, this one will achieve all 4 of our objectives, therefore being the obvious best alternative. So therefore, our ultimate recommendation for Nesto Cloud is that you should adopt a regional sales strategy to increase scalability and growth. Next, I will hand it off to Russell, who will detail how you can implement this recommendation.
Thank you, Brianna. There are 4 key implementation elements to our recommendation. The first is a revised internal structure specifically around your sales team. The next is outlining the roles and responsibilities of your sales team, particularly within the sales funnel. Next is refined strategy for scale and the customers that we think your company should target. And finally is a volume-based take rate to incentivize volume. A timeline in the immediate term is to first finalize the sales structure and initiate a search for key sales vice presidents and other team members. In the shorter term, shifting focus to smaller regional lenders like credit unions and determining what the volume-based take rates ranges will be and implementing them as a pricing strategy. In the medium term, move focus to medium-sized and larger credit unions and smaller banks. And then in the longer term, reinstate focus on large or big 6 banks here in Canada. So, in searching for sales vice presidents, internal candidates and other external platforms should be used, and these managers should be based within their sales regions. Those regions I'll delve into in a moment. The requirements for this role would be 5 to 7 years in a sales role, significant coaching and mentorship experience, and the obvious strategic thinking, competitiveness, relationship building, etc. In terms of the actual structure, a regional assembly line sales structure is what we recommend. Having 4 distinct regions across Canada: Atlantic, Central Canada, Prairies, and the West Coast, and each sales vice president supported by customer success managers and business development representatives. These all have different variants of experience and supports an internal pipeline of sales professionals. In terms of the vice presidents, their roles are to drive sales growth, manage the sales team, oversee performance goals. The customer success managers are guiding customer onboarding, driving product adoption, upselling, and managing renewals. This will reduce friction. The business development representatives will conduct market research, do the cold calling, and book meetings for the sales team to close further. In terms of the sales funnel, from lead to close and then support, this is covered by this structure. VDR's cold calling, vice presidents closing, and customer success managers onboarding and upselling. The benefits of this include reduced onboarding friction, reducing travel costs, improved response times, market familiarity, and more. Now, once this team is in place, a shift in focus of customers must occur. Acquiring big 6 banks should be the end goal, not tomorrow's goal. Trust and reliability need to be built and need to be proven over time. Therefore, national credit unions and small banks are who should be started with. Here we see an outline of your customer base over time. In the near term, and then in the short term, small players, regional players, and the acquisition of these companies are supported by the regional sales teams. As brand equity and trust build within the industry, larger players like Desjardins and EQ Bank can be acquired. And then looking at the longer term, once trust and reliability have been established, the big six are within reach of acquisition. Increasing partner trust through social proof is a must. Now, to incentivize adoption once customers have been acquired is key. And this will come through a volume-based deduction in the take rate, how your company makes its money. We propose that the standard rate be held from the $0 to $10 million value range and then decreased as volume grows. This will incentivize companies to use your company and stick with and grow with your company and its services. KPIs across the stack here include the number of financial institutions that you've onboarded, the average service volume per client, and that goes back here to our take rate. These are our average service volume. Sales per region, identifying key regions and regions that might need more support. Time to onboard new companies, the cost to acquire a new company, and the churn rate. I will now pass it over to Tiernan to take us through the costs and risks of our implementation plan.
Thank you, Russell. So just to walk you through the costs associated with this implementation plan, the main costs would be with the new sales roles and responsibilities, which we roughly estimate over 5 years would be $13.4 million, and a refined go-to-market advertisement strategy with the banks, which would be roughly $150,000 each year. And then the take rate would also be applied to any revenue with the percentage determined by volume, like Russell mentioned. So a total cost of about $14.15 million. And it will be financed by revenue. So this is an example projected revenue after implementation. As we can see, over the first 5 years, we'll spend heavy on the advertisement, $150,000 each year, and then the BDR and CSM salaries would be the largest associated costs with our plan. So revenue after implementation, we do see will stay positive even with these additional sales roles, and a regional structure will ensure that we capitalize on this customer satisfaction as we scale and as we grow. And just to walk you through some risks and mitigations associated with this plan, the first risk we identified is this competitive intensity. The likelihood of this is high, the impact of this is medium. And to mitigate this, we would use strategic marketing, positioning, and these customer relationships by focusing on the credit unions first. We also see a second risk of low client buy-in and demand, likelihood low, impact would be high. And so we're going to emphasize our value proposition and trial periods and focus on amassing data that the banks will then want access to. And the third risk, we see operational strain and leadership overstretch, likelihood medium, impact low. And we would phase this through training, leadership support, and an employee-assisted plan. And now I'll pass it on to Emma to conclude and show you what success looks like.
Thank you, Tiernan. To conclude our presentation today, I can bring it back to the objectives that I highlighted in the beginning of the presentation, and our implementation plan helps you identify each one, starting off with how we can successfully develop a scalable internal structure. Second, define the internal roles and responsibility needed, as well as reach the $54 billion in service volume by 2030, and achieve the strong institutional satisfaction from the clients. To illustrate this further, I can bring it back to Jamie and Alex from the beginning of the presentation. As we can see, they now have smiles on their faces after they've been able to get a touch of Nesto Cloud and see how it can improve their financial institutions. Jamie, the regional credit union manager, is able to now, with the flexible delivery that Nesto Cloud offers, the modernization and reduced operational costs that they need in their business, they're happy to be able to access these technological resources that that they otherwise would not have been able to get and they wouldn't have been able to afford in-house. On the other hand, on the larger scale, we have Alex, the Chief Mortgage Officer, who is now happy that they chose to buy Nesto Cloud as opposed to building in-house. They see the advantages. They see the rapidly evolving industry that is only speeding up, and that by waiting and building and the extensive costs associated with in-house, Nesto Cloud takes all of those limitations away and accelerates the deployment so they can stay ahead of regulations and they can be relieved that they can be transformed in their industry and stay competitive. That concludes our presentation today. Thank you for listening, and we welcome any of your questions.
Perfect. Thank you. Amazing. Thank you for the presentation. So we will now begin the question and answer period. Just a friendly reminder, the Q&A will last 10 minutes. So I'll start the timer when the first question is asked.
So you on the organizational structure, you mentioned that we're going to bring in a very big sales team with VP. Other than the sales structure, is there any other area within the company that you would restructure or change in order to meet our growth strategy?
At current state, no. We see the greatest bottleneck for your company being customer acquisition. Your technology is proven and scalable. What comes next is the customer. And through this structure, we believe the customers will be banging down your door.
So I have a question on the decision matrix you've put together. You've decided to your decision matrix said basically around the internal roles and responsibilities and the scalable internal structure are not being satisfied by the B2B. You didn't talk about how you came to that conclusion, so can you elaborate a little bit on that? You might want to put it up if that helps you, but I'm just curious to understand why you've chosen that those two are not being satisfied. So in the second column there.
So the main justification for those two objectives not being satisfied with the B2B alternative is primarily that that alternative would be ultimately keeping your strategy the same as it is. So the scalable internal structure we noted is not currently happening within your company. There needs to be some change. So by keeping things the same, that would not occur. And then likewise with the roles and responsibilities, as Russell highlighted in our revised org structure, the change would happen with the regional sales that's required for your growth. So with keeping things at B2B and as they currently function, the roles and responsibilities would not be refined.
I have a question about your salary projections. How do you manage to de-risk it? Because now you're bringing on this massive sales team all at once. How do you de-risk this?
I could take that. So essentially we could do it with a commission-based model, which would therefore incentivize employees to go out and get more customers, more clients. But with my estimations, I roughly projected we would pay BDRs around 60,000, and then we would pay CSMs around 125,000. And based on the regions, we would see a larger team in Ontario and the central area, out west, and then a smaller team that would cover, say, Atlantic Canada. So that would kind of decentralize the risk from putting all our eggs in one basket. And then we would focus on the credit unions first to then build up that trust and then go after the big banks, which would also kind of detach from any risks as we focus on these smaller clients first.
Just a quick question coming back to the strategy of the smaller banks. I'm curious how you would see yourselves not getting branded as a small bank solution, and if you could just share your thoughts from that.
Absolutely. As new technologies develop and as customers are acquired, we've researched and we've determined that for financial technology companies, this is a similar path that many have taken. Many unicorns have gone from acquiring a few local companies as customers, building that trust in their town, then in their state, and then in their country. And we hope that your company can take a similar path. Because a few of your customers, or the first few of your customers, might be smaller in size, wouldn't prevent the acquisition of larger customers, we don't believe. And if our timeline is followed here, within a 2-year period, you would be acquiring larger customers that anyone in Canada would know of. Not enough time for that to get set in stone section.
Maybe on your external threat slide, your middle box is implementation friction due to the integrations. But you say it's not a cost for exit, but rather a bumper rail. What do you mean by that?
So what I meant by that is essentially these banks and these credit unions already have platforms that they use which are deeply integrated into their services, which causes friction for change, essentially. And we don't see that as our solution not working. We don't see it as an exit point. We don't see it as we should exit this industry. We'd rather see it as we sell to these credit unions and as we sell to these banks, we need an approach that proves our value and proves our efficiency, which goes back to that build versus buy argument. So we just see it as bumper rail guiding us how to sell rather than an exit point.
Question around the talent retention. So you mentioned that your initial group, I'm so sorry, I don't remember what you called the lower tier, but they're like a 0 to 2 year team, and then you would propose, for example, that they would have like a commission structure and that sort of how their compensation would be structured. I'm curious how you would see the retention because those would be falling into people a little bit older than you guys, staying ideally with the company for 5 years to grow, to develop, and so on. And so I'm curious how you view the retention strategy to keep those same individuals to then leverage them into the larger banks.
Absolutely, that I could get back to that slide there. So through this strategy, this hierarchical pyramid in a way reflects that. So there are much fewer regional vice presidents than there are customer success managers, and then again business development representatives. So as we understand that your company won't be able to retain all of its junior employees, but that funnels up in the reverse of your sales funnel, where the top make it, the most loyal make it, and then they become the regional vice presidents. Does that answer your question?
Sort of, because at least from how should I say, like an organizational intelligence standpoint, like that seems to be something that you were using to leverage into the larger banks. And I'm just curious that if I hear what you're saying around like there being less people, so maybe 1 or the 10 or what have you would be moving up. But I'm just sort of curious how you would sort of maintain that momentum, maintain that training, maintain the cadence, avoid losing that organizational knowledge as people would potentially cycle out. Because again, as you guys know, this is your generation. Like it's not the most, how should I say, loyal to a company, let's say necessarily for 5 years, unless, like you said, there's an automatic, what's in it for me, and I mean no disrespect in saying that, so I apologize. But I was just sort of curious sort of how you would see maybe transitioning to maintain that, to not lose the institutional knowledge as the talent cycles through.
Right, absolutely. And in support of this framework and this org structure, you also need to be significant resources dedicated to training manuals, knowledge, technical skills, and the like. So we see that any institutional knowledge lost through junior employees leaving is really just experience and on-the-job training. And these are, at the end of the day, entry-level roles that can be filled and trained quite quickly.
Perhaps one question on your customer segmentation. You've chosen to really focus on credit unions at the forefront. What is it about credit unions that you thought was advantageous as opposed to maybe starting at the banks and really focusing on the banks?
Absolutely. The credit unions, pull that slide up as well. The credit unions don't have the capabilities to develop a comparable system in-house. The banks might, but it will take longer. If your company can acquire and get these companies first, we feel that the barriers are much lower. There's less risk. There is less competition in terms of that internal buy versus develop question. And then as these companies are and trust is proven, then your Desjardins, then your CIBCs will follow. But this is the ideal starting point.
We have time for one last question. Good, perfect. So amazing. So that is the end of the Q&A period. So thank you, delegates and judges. So now I'll kindly ask everyone to leave the room so we can prepare the deliberation. Thank you, guys.